Based on the historical data and forecast, Bitcoin has been in a downtrend. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands show that the price has been trading near the lower band, further supporting the downtrend. The forecast for the next week predicts continued downward pressure, with prices ranging from $87,000 to $82,100. Therefore, a short selling strategy is recommended. We will enter a short position at $87,000. The stop loss will be placed at $88,000 to protect against a potential short-term reversal. The initial target price is $83,400, aligning with the forecast for November 29, 2025. To optimize the strategy, we'll implement a dynamic trailing stop loss based on the lower Bollinger Band. If the price retraces towards the middle band, we will adjust the stop loss to the lower band. For example, if the price rises to $86,000, the stop loss will be moved to $85,200. This approach allows us to capture profits while minimizing potential losses. If the price reaches the target of $83,400, we will take profits. However, if the downtrend continues, we can consider lowering the target price to $82,100 based on the forecast for November 30, 2025. This combined strategy leverages both technical indicators and forecast data to maximize returns while managing risk effectively. Based on the historical data and forecast, Ethereum is exhibiting a clear downtrend. The price has consistently declined from November 10, 2025, to November 30, 2025, with the forecast indicating further downward pressure. The RSI consistently remains below 50, with values frequently dipping below 30, suggesting the asset is often oversold. The Bollinger Bands are also widening, indicating increased volatility and a potential continuation of the downtrend. Considering these factors, I recommend a short selling strategy. My strategy involves entering a short position when the RSI falls below 30. Specifically, I suggest entering a short position at $2,780. Place a stop-loss order at $2,840, just above the recent support level, to limit potential losses if the price unexpectedly reverses. Set a target price at $2,580, aligning with the forecast for November 30, 2025. This strategy combines the oversold RSI signal with the downtrend and forecast data to maximize potential returns while managing risk. The portfolio will be 60% short selling, 20% RSI, and 20% Bollinger Bands. Based on the historical data and forecast, XRP has been in a downtrend, consistently testing the support level of $1.95. The RSI has been predominantly below 50, indicating bearish momentum, and recently dipped below 30, suggesting an oversold condition. The Bollinger Bands show that the price is nearing the lower band, further reinforcing a potential bounce. Considering this, I propose a contrarian strategy focusing on short-term rebounds. We will initiate a long position at $1.92, placing a stop-loss order at $1.89 to mitigate potential losses if the downtrend continues. The initial target price will be $1.99, aiming to capture a quick profit from a potential bounce off the support level. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI starts to trend upwards and crosses above 30, it will signal a strengthening of the bullish momentum, prompting us to adjust the target price to $2.07. Conversely, if the price breaks below the lower Bollinger Band and the RSI remains low, we will tighten the stop loss to $1.90. This combined approach, blending trend analysis, RSI signals, and Bollinger Bands confirmation, aims to maximize potential returns while managing risk effectively, creating a portfolio with the most efficient strategy. Based on the historical data and forecast, BNB exhibits a downtrend, consistently testing the support price of $832. The RSI consistently dips below 30, indicating an oversold condition. The Bollinger Bands show the price nearing the lower band, further confirming a potential downward trajectory. Therefore, I propose a short selling strategy. Entry price will be $841, with a stop loss placed at $847 to protect against a potential reversal. The initial target price is $809, aligning with the forecast for November 24, 2025. To maximize returns, I recommend a tiered target approach. If the price reaches $809, we will take 50% of the position off the table. If the price continues to fall, the second target price will be $795, and the remaining 50% of the position will be closed. This strategy leverages the current downtrend and oversold conditions, while incorporating the forecast data and Bollinger Bands to manage risk and maximize profit potential. The support price of $832 acts as a critical level, and if breached, a re-evaluation of the strategy would be necessary. Based on the historical data and forecast, Solana exhibits a downtrend, with the price consistently decreasing from November 10th to November 23rd. The forecast for the subsequent week further reinforces this bearish sentiment, predicting a continued decline. Considering the RSI consistently below 50, hovering around the oversold level of 30, and the price trading near the support level of 127, I recommend a short selling strategy. We will enter a short position at $130, placing a stop loss at $134 to limit potential losses if the price unexpectedly reverses. The initial target price will be $126, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band of $122, we will adjust the target price to $120. This tactical adjustment will maximize profit while minimizing risk. The RSI indicates that the asset is currently oversold, suggesting a potential bounce. However, given the overall downtrend and bearish forecast, a short position remains the most prudent choice. The combination of RSI, Bollinger Bands, and support/resistance levels provides a robust framework for this high-return investment strategy. Based on the historical data and forecast, TRON has shown a downtrend with decreasing RSI values, indicating weakening momentum. The forecast predicts a continued decline, and the price is approaching the support level of $0.274. Given the RSI is consistently below 50 and nearing oversold territory, a long position could be considered with a cautious approach. The Bollinger Bands show that the price is near the lower band, suggesting a potential bounce. I propose a strategy to enter a long position at $0.275, placing a stop loss at $0.274 to mitigate potential losses if the downtrend continues. The initial target price would be $0.284, the resistance level, aiming for a quick profit. To refine the strategy, I will incorporate a trailing stop loss based on the Bollinger Bands. If the price rises and touches the upper band, the stop loss will be adjusted to the lower band, securing profits while allowing for further upside. If the price fails to reach the $0.284 resistance and starts to decline, the initial stop loss at $0.274 will be triggered, exiting the position. The final target price will be $0.296, the center of the Bollinger Bands, representing a more conservative profit target. This combined approach leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin demonstrates a clear downtrend. The price has been consistently declining from $0.182 to a forecast of $0.136 over the past 2 weeks. The support price remains steady at $0.14, while the resistance fluctuates around $0.152, indicating limited upside potential. The RSI consistently hovers below 50, with readings frequently dipping into oversold territory, below 30, suggesting the asset is undervalued but lacks strong upward momentum. Considering these factors, I propose a short selling strategy with a focus on capitalizing on the prevailing downtrend. My recommended strategy involves entering a short position at $0.149. The stop loss should be set slightly above the resistance level at $0.157 to protect against a potential short-term bounce. The initial target price is $0.137, aligning with the forecast and the lower Bollinger Band. If the price reaches $0.137, consider moving the stop loss to break even to secure profits and potentially ride any further downward momentum. This strategy combines technical indicators and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, Cardano exhibits a clear downtrend. The price has consistently been declining from November 10, 2025, to November 23, 2025, and the forecast indicates further downward movement. The RSI consistently remains below 50, and has spent considerable time in oversold territory, below 30, suggesting a bearish momentum. The Bollinger Bands also confirm this, with the price trading near the lower band for an extended period. I recommend a short selling strategy capitalizing on this trend. Entry price should be $0.379, with a stop loss placed just above the upper Bollinger Band at $0.384. The initial target price should be the support level of $0.405. To maximize returns, I suggest a tiered target strategy. After reaching the initial target of $0.405, move the stop loss to break even, securing the initial investment. Subsequently, aim for a second target at $0.361 based on the forecast. If the price continues to decline, a final target of $0.364 can be considered. This approach allows for profit taking at different levels while mitigating risk through strategic stop loss adjustments. This portfolio combines the RSI strategy with the Bollinger Band strategy and support and resistance prices to achieve high returns. Based on the historical data and forecast, Bitcoin Cash shows a clear upward trend. The price has consistently bounced off the support level of $482, and the forecast indicates a continued climb towards $575. The RSI fluctuates between 40 and 60, suggesting periods of mild oversold and overbought conditions. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Firstly, we will initiate a long position when the RSI dips below 45, aiming to capitalize on the oversold condition. The entry price will be $535, with a stop loss set at $482, right below the established support level. The target price will be $568, aligning with the forecast high for the week. Secondly, we will refine this strategy by incorporating the Bollinger Bands. When the price touches the lower band, indicating a potential oversold condition, we will enter a long position at $535. The stop loss will remain at $482, and the initial target will be $557, near the upper band. If the price breaks through the upper band, we will adjust the target price to $575, based on the forecast. This combined approach, blending RSI signals, Bollinger Band confirmation, and support/resistance awareness, offers a robust framework for capturing potential gains in the Bitcoin Cash market. Based on the historical data and forecast, Wrapped Beacon ETH has been exhibiting a clear downtrend, consistently breaching the support level of $3,000 and showing a decreasing forecast. The RSI consistently remains below 50, frequently dipping into oversold territory below 30, indicating strong selling pressure. The Bollinger Bands also confirm this trend, with the price consistently trading near the lower band. Therefore, I recommend a short selling strategy. Entry price will be $3,050. Given the support level at $3,000, a stop loss should be placed slightly above this level at $3,080 to mitigate potential losses if the price unexpectedly rebounds. The initial target price will be $2,730, aligning with the forecast for November 30, 2025. To refine the strategy, I will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the RSI climbs above 50, suggesting a potential reversal, I will partially close the position and reevaluate. Similarly, if the price touches the lower Bollinger Band, indicating an oversold condition, I will consider tightening the stop loss to $3,020. The second target price will be $2,710. This adaptive approach allows for capitalizing on the ongoing downtrend while mitigating risks associated with potential short-term fluctuations. This strategy aims to achieve high returns by capitalizing on the existing bearish momentum in the market. Based on the historical data and forecast, SKY exhibits a clear downtrend. The price has been consistently declining from November 10, 2025, to November 23, 2025, and the forecast for the next week indicates a continuation of this downward momentum, potentially reaching as low as $0.0373. The RSI consistently remains below 50, fluctuating between 32.2 and 49.4, suggesting a lack of strong bullish momentum. The Bollinger Bands are also contracting, indicating decreasing volatility and potentially a consolidation phase before a further decline. Given this analysis, I recommend a short selling strategy. The entry price for the short position should be $0.0441, capitalizing on the recent downward trend and a forecast price of $0.0446. A stop loss should be placed at $0.046, just above the upper Bollinger Band to protect against a potential short-term reversal. The initial target price is $0.0418, aligning with the established support level. If the price breaks through the support level, the target price can be adjusted to $0.0389 based on the forecast. This strategy combines technical indicators and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, Aave is showing a downtrend. The price has consistently been declining from November 10th to November 23rd, and the forecast for the next week indicates a continuation of this downward momentum. The support price of $158 provides a crucial level to watch, while the resistance price of $197 has not been breached recently. The RSI has been consistently below 50, fluctuating between 33.5 and 51.8, indicating a lack of strong bullish momentum. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential for a bounce, but the overall trend remains bearish. Therefore, a short selling strategy is recommended. The strategy will involve short selling Aave when the price touches the support level of $158. The entry price will be $158. A stop-loss order should be placed just above the recent high of $178, setting the stop-loss price at $178. The target price will be $147, aligning with the lower Bollinger Band and the forecasted price decline. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels to maximize potential returns while minimizing risk. This approach aims to capitalize on the expected downward trend of Aave over the next 2 weeks. Based on the historical data and forecast, Quant shows a downtrend with increased volatility. The RSI consistently dipped below 50, frequently entering oversold territory below 40, indicating potential buying opportunities. The Bollinger Bands have been widening, suggesting increased price fluctuations. The forecast for the next week projects a continued downward trend, with prices ranging from $76.3 to $74.9. Given this analysis, I recommend a contrarian strategy focusing on short-term bounces within the downtrend. My strategy is to implement a buy-on-dip strategy. We will enter a long position when the RSI falls below 38, specifically at $74.8. The stop-loss will be set just below the support level at $71.6 to protect against further downside. The initial target price will be the center of the Bollinger Bands, which is around $77.7. If the price reaches this target, we will reassess the situation and consider a second target at $81.3. This strategy combines RSI and Bollinger Bands to capitalize on short-term rebounds while managing risk with a clear stop-loss and target prices. Based on the historical data and forecast, XRP has been in a downtrend, consistently testing the support level of $1.95. The RSI has been predominantly below 50, indicating bearish momentum, and recently dipped below 30, suggesting an oversold condition. The Bollinger Bands show that the price is nearing the lower band, further reinforcing a potential bounce. Considering this, I propose a contrarian strategy focusing on short-term rebounds. We will initiate a long position at $1.92, placing a stop-loss order at $1.89 to mitigate potential losses if the downtrend continues. The initial target price will be $1.99, aiming to capture a quick profit from a potential bounce off the support level. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI starts to trend upwards and crosses above 30, it will signal a strengthening of the bullish momentum, prompting us to adjust the target price to $2.07. Conversely, if the price breaks below the lower Bollinger Band and the RSI remains low, we will tighten the stop loss to $1.90. This combined approach, blending trend analysis, RSI signals, and Bollinger Bands confirmation, aims to maximize potential returns while managing risk effectively, creating a portfolio with the most efficient strategy. Based on the historical data and forecast, Algorand is showing a clear downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week suggests this trend will continue. The support price is consistently at $0.136, and the resistance is at $0.152, indicating a limited trading range. The RSI values are mostly below 50, and have been trending downwards, suggesting the asset is oversold but with continued bearish momentum. The Bollinger Bands are also widening, which typically indicates increased volatility and potentially a continuation of the current trend. Therefore, I recommend a short selling strategy. Entry price should be $0.144. Given the consistent downtrend and the forecast, a stop loss should be placed slightly above the resistance level at $0.157. The target price should be $0.128, aligning with the forecast and allowing for some buffer. This strategy leverages the bearish momentum, utilizes the widening Bollinger Bands to anticipate volatility, and incorporates RSI to confirm the oversold condition, aiming for high returns in a declining market. Based on the historical data and forecast, Stellar demonstrates a clear downtrend. The price has consistently traded near the support level of $0.23, and the forecast suggests continued downward pressure. The RSI consistently below 50 indicates bearish momentum, with dips into oversold territory. The Bollinger Bands show the price nearing the lower band, reinforcing the potential for further decline. Therefore, I recommend a short position strategy. Entry price should be $0.241. The stop-loss price will be set at $0.247, just above the recent resistance level to limit potential losses if the price unexpectedly reverses. The target price is $0.222, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we can incorporate the RSI. When the RSI falls below 30, indicating oversold conditions, it could be a good entry point for a short position. Combining this with the Bollinger Bands, if the price touches the lower band and the RSI is oversold, it strengthens the short signal. The portfolio will prioritize the short position strategy with an entry price of $0.241, a stop-loss price of $0.247, and a target price of $0.222. This approach leverages both technical indicators and price forecasts for a high-probability, high-return investment. Based on the historical data and forecast, Bittensor shows a clear downtrend. The price has consistently moved lower, with recent forecasts predicting further declines. The RSI consistently below 50, with values frequently approaching and entering oversold territory, below 30, confirms the bearish momentum. The Bollinger Bands also support this view, with the price consistently below the moving average and nearing the lower band, indicating increased volatility and potential for further downside. Considering these factors, I propose a short selling strategy. The entry price for this short position will be $274. Given the strong downtrend and proximity to the support level of $271, a stop loss should be set slightly above the recent high, at $296. This provides a buffer against potential short-term reversals. The target price is set at $250, aligning with the forecast for November 30, 2025. This strategy aims to capitalize on the ongoing bearish trend while managing risk with a defined stop-loss and target. The RSI is at 30.6, which is oversold, so it is a good time to short. The Bollinger Bands are also supporting the short position. Based on the historical data and forecast, Zcash shows a volatile trend with periods of strong upward movement followed by corrections. The RSI fluctuates between 50 and 72, indicating neither extreme overbought nor oversold conditions consistently. However, the Bollinger Bands suggest potential trading opportunities. The price recently touched the support level of $518, and the forecast for the next week predicts a gradual increase, with prices ranging from $588 to $571. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. My recommended strategy involves entering a long position when the price touches the support level of $518, coinciding with the lower Bollinger Band. The stop loss should be set slightly below the support at $512 to protect against potential downside risks. The initial target price will be $568, aligning with the upper Bollinger Band and a reasonable profit margin. If the price continues to rise, a second target price of $588 can be considered, based on the forecast data. This combined strategy leverages both technical indicators to maximize potential returns while mitigating risks. Based on the historical data and forecast, Hedera exhibits a downtrend with increased volatility. The RSI consistently hovers below 50, indicating weakening momentum, and recently dipped below 30, suggesting an oversold condition. The Bollinger Bands show the price fluctuating within a narrowing range, with the lower band frequently touched, further reinforcing the bearish sentiment. Given the forecast predicting continued downward pressure, with prices decreasing to $0.132, a short position is warranted. Therefore, I recommend a short position entry at $0.148. Given the support level at $0.146, place a stop-loss order at $0.149 to protect against a potential rebound. The initial target price should be $0.132, aligning with the forecast and a significant price reduction. If the price continues to decline, a second target price of $0.130 can be considered. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, DECRED shows a fluctuating trend with periods of both upward and downward momentum. The recent decline in price, coupled with the forecast predicting further decreases, suggests a potential shorting opportunity. We will implement an RSI-based strategy with an oversold level of 20 and an overbought level of 80. When the RSI falls below 45, indicating an oversold condition, we will initiate a short position. Specifically, we will enter a short position at $27.1. To mitigate risk, we will set a stop-loss order at $29.7, just above the recent resistance level. Our target price will be $21.8, based on the forecast and a conservative projection of the price decline. To refine this strategy, we'll incorporate the Bollinger Bands. If the price is trading near the lower band, it reinforces the oversold signal. Given the forecast and the current RSI level, we will prioritize the RSI strategy with a slight adjustment based on the Bollinger Bands. Therefore, the final strategy is to enter a short position at $27.1, with a stop loss at $29.7 and a target price of $21.8. This approach aims to capitalize on the anticipated downward trend while managing risk effectively.